And actually, let's start right there. You're listing on the NYSE. You had been, as I understand it, OTC, and now your common shares are listed there. What does that mean for you in terms of a milestone?
Well, it's an important move for us because it brings us closer to our clients, most of which are in the U.S., and it allows our clients who know us from our various listed products and strategies to buy our shares. There's still some impediments otherwise between the U.S. and Canadian markets.
Why now, Peter? Why did now seem to be a good time? Is it because gold prices are going up at the moment?
Yeah, the interest in our strategies is same as gold, has never been higher. We've taken in about 1.5 billion of inflows this year. So we have a lot of momentum. We have a lot more people reaching out to us. So it was just a good timing to consider this.
So then let's talk about the outlook for gold. Obviously, there's been a huge run up in the value of it here in U.S. dollars. Give me your sense of what drives it. And I guess more importantly, I mean, I think there's a kind of an agreement, Peter, that there's a near-term bullish framework for gold. But beyond that near term, what sustains it?
Well, we think the long-term case for gold is growing stronger as well. So now you're getting those buying it as a political hedge for later this year. And certainly the big issues are the purchasing power of the various fiat currencies seems to be declining more rapidly as they're printed. And secondly, the credit stresses in the economy and also at the government level as they print these much larger deficits are increasing. So just a more popular hedge. It's liquid, it's a big market, so it's become, still something that investors are chasing and will for some time.
So how safe are the dividends in the mining space and metals more broadly, Peter, not just gold?
Well, they're certainly not what we would call fulsome. The mining area is experiencing record earnings and cash flows. They've not yet raised their dividend rates to the fullest extent possible, but they're slowly starting to do so. It's not been an industry that's been known for that. The diversified miners, on the other hand, pay very generous dividend yields. So mining in general be a very large growth component to the S&P earnings, and I think earnings will surprise those following gold producers. Analysts are still using much lower gold prices than spot for their forecasts.
When you think about the long-term ramifications of this coordinated central bank activity that we're now seeing without precedented levels of easing, what's your expectation? I mean, there's obviously people debate deflation and ultimately whether we wind up with inflation. What's your thinking along those lines?
Yeah, well, luckily I'll be a bit biased here and say gold does equally well in either scenario. But for deflation, which we're into now because of the slack in the economy, and the concern over asset prices, that may be with us for some time. I think generally speaking, the hit to the economy is going to be worse than expected, and the government deficits required to support the economy are going to be greater than expected. But long term, this is inflationary. Long term meaning, a year and a half, 2 years out. If you look at gold against the purchasing value of all fiat currencies, it's actually crushed fiat currency since 1971, and not many people realize that.
So what are your most popular products right now, Peter? Where are the flows most, obvious?
No question, it's into the bullion trusts. Our trusts are 100% physically backed and also have a bit of a tax advantage in the U.S. Most of the flows have been there. Most people just want bullion because it's safe and it's fast and it's relatively low cost. The money is just starting to move to active equity strategies now. And we've also had some credit strategies in the gold area that have been popular. So active strategies just now getting some interest, hasn't been very large to date.
And then the perennial question, of course, is owning the managed producers versus owning bullion outright. Make the case for the part of the market you want to be in to get the most leverage.
Well, we like the junior producers because we think gold mines are getting harder and more expensive to find, takes longer, et cetera. So the gold majors are in very healthy shape, as we mentioned, and are going to be buying some of these juniors, the higher quality deposits. So we think very catalyst-rich, bit undercovered and unloved now, and so there's more gains to be had in those. We think that's an exciting area.
So the ticker is SII. I'm curious if you'll issue more shares, Peter.
Well, right now we're well capitalized. We have a strong balance sheet for what we do. The only reason for issuing more shares would be if we saw substantial acquisition opportunities. And in our sector, we're pretty much number one, but we do see some acquisitions in our future. So we'll be looking at those very closely.